Welcome everybody. In this video, we are going to learn what is working capital and how to calculate the net working capital. Today, I'll show you a very basic, simple and a quick example of the calculation of the net working capital. So those who are not sure about what is net working capital, or those who are new to this concept, let me just tell you that net working capital is the difference between the total current assets and the total current liabilities. When you talk about the concept called as working capital, it refers to the short term or the current assets necessary to run a business on a daily basis. Now, the next question is, what are those current assets, or what are few examples of the current assets? So these assets include cash and marketable securities, accounts receivable, inventory, and typically funded by the short-term liabilities. We can say, the current liabilities such as accounts payable, short-term notes payable. And because of the short-term nature of these assets and liabilities, decisions involving them are more flexible and easily reversed than the capital investment decisions. The greater flexibility associated with the net working capital, that doesn't mean that there will be an easy task and it doesn't have a significant impact on the cash flow available to the investors. Actually, the management of the short-term assets and liabilities can have a significant impact on the cash flow available to firms' investors. In extreme cases, poor working capital management can result in severe financial consequences. By that I mean it can lead to bankruptcy. So we can say that a low value for this number is really undesirable because it indicates that the company may not have enough cash in hand to cover its immediate expenses. So today we'll be working on, the Excel problem set, and this is the data given for a company, and the name of the company is Gillan Production. So this is the information available on the balance sheet of Gillan Production Company. And there are different items that are part of the balance sheet involving the current assets and current liabilities. So for this question, our objective is to find out the Gillan Production's net working capital. For that, what we have to do is, first, we have to find out how much is the total amount of current assets and how much is the total amount of current liabilities. Then we can find out the difference between the total current assets and current liabilities. So for that, what we have to do, we have to first identify from this list which items can be included in the current asset list and which items can be included in the current liabilities, and classify them. So let us begin with the current assets. So if you can see the list here, the first item is cash and marketable securities. This is current assets. So let me just write it in a short form. So cash and marketable securities is a current asset, and remember, cash is the most liquid asset, and marketable securities are the securities or debts that are sold for, or you can say redeemed, within a period of 1 year. These are the financial instruments that can be easily converted into cash. All the marketable securities that can be easily converted to cash. And some of the examples of the marketable securities includes government bonds, common stock, certificate of deposit. So this is first item. Okay, the next item is accounts payables. So this is not a current asset, rather this is a current liability. So let me just write it down in the short form called as current liability, CL. The next item for the current asset is inventory. Inventory is very important. When you talk about inventory, it is the least liquid current assets. So let me just classify them as current assets. Well, we have accounts receivable, which is also a current asset. So accounts receivables are actually the enforceable claims for the payment held by the business for goods supplied or services rendered that the customer or any kind of clients have ordered but they have not paid for. So these are generally in form of like invoices raised by the business and delivered to the customer for payment within a time period. So this is another current assets. Next one is your short-term notes payable. That is actually your current liabilities. And the last item is other current assets. It's very simple. We have to include that in the current asset. Now, some of you may ask me that what that other current asset includes, or what is that other current assets? So basically, other current assets are the liquid assets that are characterized as uncommon or insignificant, but that are being used within the period of 1 year. And just for example, any advance paid to the employees or suppliers, a piece of property that is being, ready for sale, any kind of restricted cash or investments, and cash surrender value of life insurance policy. So all these are the part of your current assets. Now, as I've mentioned here that, okay, there are like two items under current liabilities. That is your accounts payable and short-term notes payable. Accounts payable and short-term notes payable. Now, if we talk about accounts payable, it is actually money owed by the business to its supplier shown as a liability on company's balance sheet. And if we talk about the short-term notes payable, then these are the obligations to pay a specific sum plus interest within 1 year. So notes payable usually refer to the repayment of loan funds in the near term. Now, we have completed the first step, that to identify what are the list of current assets and current liabilities. So let us now simply add those current assets to find out the total current assets. So first is cash and marketable securities, then inventory, accounts receivable, plus the other current assets. Press enter to get the value. So the total current assets is like $20 million. The next step is to find out the total current liabilities, and we have already found that there are like two items. So let us just simply add those two items of current liabilities, and here we found that there is like 10 million of current liability. So this is basically a hypothetical example to find out the calculation. So as I mentioned earlier, to find out the net working capital, we have to see what is the difference between total current assets and total current liabilities. So it's 10 million. So the net working capital is $10 million. It means that, gel production has enough current assets to meet its current liabilities. If all the current liabilities are to be settled, then the company would still have $10 million left to continue its operations. And because this is a high value, it means that it is a good sign for the company. So that's all for today. Thank you for watching the video and checking my channel. Hope you got some value from this video that you just watched. And if you get any value, please like this video and subscribe to my channel. And if you have any questions or suggestion or something that you want to see, please feel free to comment below. Thank you very much.